I love this chart. I love this chart because it shows you what economists can tell you, which is not an enormous amount. There you have the UK GDP as it has been, and the dotted lines are what economists have actually forecast over time. And you can see that there is a tendency by economists to essentially forecast with a ruler. They get it out and they draw a dotted line for as far into the distance as you need it, and they draw it around somewhere between 2 and 2.5%. And that really counts as a forecast for which these people are paid not enough money in my view, but probably far too much in yours. And the government recently, the OBR and the budget last week, did exactly that, and it's put together a new forecast, which sits at a little bit lower than the previous forecast. And critically for our discussion today, it's talking all about productivity being the problem. That's why it isn't quite as high as it has been. And I'm going to come on to a couple of things. One is to say that I don't think productivity is as important as all that. We'll see what might be slightly more important. And secondly, to look at some of the alternatives. So first of all, before we completely dismiss productivity, let's look at some of the things that it might really start to influence. And this is another chart that I like. I've only put, of course, charts that I like up in the presentation for you today. We've looked here at GDP growth, which in its very simplest terms is two things. It's the number of people working and it's the productivity increases. So if you increase the number of people working each year and you increase the amount of productivity, you can more or less get GDP growth. And so I've charted that over time till this is about to go in 2013. And then I've done something which is a little bit naughty, and I've said that assume that UK productivity goes back to the level that it was before, which is to say, ignore the fact that it's stalled for the last few years, and then overlay what's happening demographically. Now this matters because of all the things in economics, demographics is probably the only one that you can forecast with a fairly good degree of accuracy. How many 35-year-olds are there going to be in the economy in the next 10 years? Count up the 25-year-olds right now, you've got the number. So this is what happens, and we see demographically, does this thing work? Yep. That number there isn't so great. And in fact, it drops from a trend rate of 2.5% to a trend rate of 0.8. Now 0.8 isn't recession, but it's going to feel like recession. So really, there's an enormous challenge to get our productivity up. This is the problem. Now, there's lots of ways to measure productivity. Do you measure it per hour? Do you measure it per person? Do you measure it the total economy, et cetera? Here are a couple of measures going forward. And you can see the UK there, which is to say the middle of the pack if we look at GDP per capita, but not so great if we look at GDP per hour. So UK is theoretically, and a lot of people talk about the UK having a productivity problem. The problem here is there's usually three countries that people cite as being better than us. That's France, Germany, and the US. And just very quickly go into why, actually, I don't think either, or certainly France and Germany, aren't necessarily the answer where we want to focus. Now, we all know that France's productivity is, certainly if you look at here, this is France, quite a bit better than us on a GDP per hour basis. We also know the French have a 35-hour week, which they're busy trying to get rid of. They also have much higher structural unemployment. Now, I can move the UK towards French levels of productivity very, very easily. I'll just wave my magic wand. I will make the 10% least productive people in the room unemployed, and the average will go up. Now, that's the sort of thing that you used to have in the Soviet Union, where you drove yourself towards outcomes. I think we as a society made a different choice, and I think our choice is good. But let's not get too fixated on the productivity figures. As far as the Germans go, and they're sitting here, Germany is a very different economy to ours, of course, much more manufacturing-based. Manufacturing has tended to be easier to get productivity increases in past. And I think critically, of course, for the Germans, they also tend to overinvest in a lot of their capital stock. Now, if you want to catch me in the coffee afterwards, I'll explain to what all this means, but it is notable that the Germans get particularly low returns on investment. So if you overinvest, you get great productivity, just rubbish returns. That tends to be what's happening there. The country that is interesting is all the way over here, and that's the United States. That shows a lot of the sorts of things that I think we should be focusing upon, a lot of the sort of things that you and LEPs are focusing upon all the time. So I'm going to skip that one in the interest of time. And here's really the crux of it. Here's what I think is even more important than productivity, and that's agility. And there's, in fact, a report which I've left several copies on the table outside. Looking at agility, looking at where we're going to be going in the next few years is absolutely critical. And in fact, if I had to choose between agility and productivity, quite clearly I would choose agility. I would choose the number of small firms out there, the way in which businesses are going to grasp opportunities in future as being far more critical to us than actually increasing productivity in some well-established manufacturing or service business. We see here what's happened within Europe as a whole. This number at the front here, that's 2002. Since 2002, what we've seen in the world has been an explosion in the amount of productivity, an explosion in the number of opportunities that people see, that businesses see around the world. And you can see there's two different colors here. The light color is the European Union countries. They sort of dominate the lower half. In fact, the only countries down here that are non-European Union countries that are in the lower half are Japan, Russia, and Morocco. Now, these are not go-ahead economies. I mean, there may be lovely places to visit, but they're not the sort of places that we want to be looking and saying, this is what we want in the future. So we've got an enormous challenge in front of all of us, and people have an enormous part of it, which is how are we going to foster more of those small businesses? How are we going to get more of those things coming through? We're doing pretty well so far. Some of the things here is the UK business population, a lot of small business starting up. The UK has really been going through, and in the last few years, in fact, since the 2007 recession, an enormous number of businesses have started. And this is not just one-person consultancy business starting up until you get something better. This is actually real businesses starting because people see opportunities. It's easier to start a business than ever before, and they're getting more help and more opportunity than ever before. We can see that here if we look at the number of startups in the country as a whole. Yes, of course, the Southeast does particularly well, but if you look at our per capita basis, it's not just something in the Southeast, it's the whole country. The whole country has really caught the entrepreneurial bug. This is absolutely fantastic news going forward. We look just, for instance, on the broadband subscriptions. Interestingly here, we've got a divergence between, if we looked at, I didn't put all the countries up there because you could never read all of the information, but basically, the countries up here are all your Scandinavians, Latvia, Lithuania, Finland, the US, and the ones down here tend to be a lot of your more Central European countries not doing as well. It's quite clear that there are countries out there that are grasping the opportunities, and there's countries out there that are lagging those opportunities really going forward. So just some lessons really of the things we should be doing and having. First of all, have a clear rule of law. Well, I think we very much have that in the US already, the UK already. A sympathetic ecosystem of services. Now, this is where a lot of people like you come in. A lot of things, I myself started a bank a number of years ago, and one of the things that we did was we got lawyers to work on a contingency basis. No, don't charge us £500 an hour or £200 an hour. If the deal goes ahead, you can charge us double your fees. If it doesn't go ahead, 50% of your fees. Lawyers who would do that sort of thing are absolutely critical to getting businesses off the ground. Yes, of course, there's a need for core infrastructure, whether it's broadband, which I think is probably the most core, but lots of other things as well. And make it easy to fail and try again. I heard recently that the average time that you spend in a court case in Italy in a winding up is 8 years. How many private equity firms do you think are going to be willing to invest in Italy if each time a firm fails, they spend 8 years going through bankruptcy proceedings? Quite obviously, none. And that's a real problem. Don't drive away your entrepreneurs. I think that's one of the big challenges for a lot of Southern Europe right now, is that those entrepreneurs are leaving in droves. And where are they coming? Well, they're coming here in many ways. It's actually an enormous boon to the UK economy as a whole, is all these people look upon the UK as the place to start their business because we have the most business-friendly environment, and it's up to all of us to make that even better. Don't make it impossible to move between firms. I'm not wanting to pick on Italy again, but they do happen to have a particularly sclerotic economy. Over 50% of employees in Italian firms have been with their firm for more than a decade. Now, I think that being with your firm for a long period of time can add real value. But if everybody sticks with their firm for a very long period of time because they're afraid of moving, because they think, realistically, if I leave my firm, I'll never get another job, that's a problem. And it's particularly a problem if you're a small company, you want to attract people into your firm because you want to grow. You can't get anybody because nobody will leave. Everybody sits still. That's a problem. One of the things that we've been urging the Chancellor at the IOD to do is don't tax away investment capital. The UK is particularly dependent upon a very small number of people to pay an extraordinarily large amount of the total tax base. Every time you tax those people more, what do you do? Well, one of the things you do is you take away where they would put that money that they earned. And the answer is almost invariably into various forms of longer-term investment. So you're taking money out of long-term investment and spending it immediately through the government. I absolutely agree with the Chancellor's priority of balancing the budget, but I don't think it should be, he shouldn't be aware of the dangers he has on loading ever more onto those people who are going to be making the longer-term investments. Finally, don't have a vision of how the future should look. Actually, one of the things about agility is we don't know how the future is going to look. There's a wonderful thing that they do at the Davos Global Conference. Whenever you want to look forward 20, 30, 40 years, you have to look back a similar amount of time. And that really allows you to frame the whole debate as to what might happen, how might things change. You know, I look back at my career when I started in 1986, I joined the Royal Navy. I joined the Royal Navy in part because I thought fighting the Cold War was really important. We've forgotten completely that that's an issue and that people really cared about that at the beginning of my career. So things like that will happen a lot. So we've got a new world. We're going to be more informed. Look at the number of books that we've got coming out. Absolutely enormous. We don't even track the number of books anymore. We've doubled the amount of people with tertiary education. We've got completely overwhelmed with information all the time. How are we going to deal with all of that? And I'm just going to close with this slide. I'm not going to as I say in the horrible jargon of consultants, drain this slide. But just look at some of the things here. We've got big challenges facing us, but also big opportunities. And just picking out a couple of those, technical innovation is going to be absolutely key. It's going to be key to both how we operate as businesses and how the government provides services to us. People's expectations are rising all the time. And that's an enormous challenge for everybody. It's one that businesses is very, very used to making. It's one the government is getting used to making. And I go around the country and I'm very, very lucky to meet a lot of governments and the good government organizations. I see my friends from Northamptonshire here. The good government organizations are absolutely fantastic and really, really up for it. And the bad ones are sort of struggling, to be quite honest. How do we deal with all of that? How do we deal with the people who can't cope with the change? Because there are people out there who won't be able to. But it's important to figure out how we're going to bring them along as well. Ladies and gentlemen, I'm extraordinarily optimistic about the future. I'm extraordinarily optimistic about what business can do, about what all of you can do with business, and how the government can work with you all. And I'd be more than happy to answer questions at the end. Thanks so much.